Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 16th of June. Starting off with the FTSE 100, which is obviously trying to make progress towards that top of that rising trend channel from basically March last year, 90-20 the area there. We've obviously got the old March resistance from earlier this year at 89.08, and that's the initial target, especially while we're on the right side of 18,800. The resistance that we had until the beginning of this month. On the downside, worst case, probably rug pull towards 8,700, but not expecting anything lower than that. 50 and 200 day lines both rising at the moment, rising well, which is effectively similar to a golden cross scenario. Moving on to the DAX, and here the picture, one of the market trying to regroup. The old resistance from March was 23,500. That's basically what we've done as we are creating as new support. And while we're above that area, maybe down to 23,300, which was the support from the latter part of April. Still looking for this market to head to the top of the channel there, 24,700, and do it perhaps by the end of next month. But a sort of a slightly scary toppy situation, or topping situation, given the gaps down that we've had, but at least so far finding support at old resistance. On to the Dow, and here still struggling with the floor of that rising trend channel from May last year, so 42,000, and at least we're still above that. The trigger for a fresh move to the upside and to suggest that we're safe would be a weekly close above the 43,000 level, clearing recent or post-March resistance for this market. The obvious target after that, 44,000. A big picture target up to as high as 47,000, the top of that rising trend channel, but at the moment obviously rather difficult to work out what might take us there. On the downside, worst that is expected would be the 50-day line currently rising there at 41,100. RSI still at just above neutral 50, so I suppose we've got to give it the benefit of the doubt and say that we're half full rather than half empty. Moving on to Bitcoin, and a decent double bounce at the 50-day line so far this month, giving the market a more healthy glow than it's had in the recent past. The key thing to do over the next few days, obviously, is to test and conquer the 112,000 record peak from last month. Big picture target as high as 125,000, the top of that rising trend channel from early last year, and that would hopefully be on the cards by the end of next month, by the end of July. The other positive at the moment, apart from bouncing off a rising 50-day line, is the extended bounce off RSI 50 that we've had over the last week. That is normally a very good leading indicator on the upside, as is the way, of course, the 50 and 200-day moving averages are both rising at the moment. Moving on to gold, which obviously should be benefiting from the geopolitical disasters that we have at the moment, and here 3,400 the obvious level to break. If we can break that, then looking for 3,800, the top of that March trend channel, hopefully as soon as the end of next month. The other positives at the moment are the way that we've had effectively 4 RSI 50 rebounds over the last 2 to 3 weeks. Downside at the moment seen as being no lower on an end of day close basis than the 50-day line, 32.75. Moving on to the stocks, and starting off with Coinsilium, not Coinbase. And here you can see that we rather blown the doors off in terms of the 12 pence resistance zone. I did say previously, said previously that through 12 pence we're looking at 30 pence. Bit of resistance on the way down that we had there at 20, so maybe that's the first port of call, which I'm sure people would be delighted enough with over the next few days. But looking for 30 pence maybe by the end of next month, while we're above 12 pence is the message at Coinsilium. Different sector, which is Falcon Oil and Gas, and here you can see a nice gap higher for the shares, rising trend channel there from December, top of the channel there heading for 10 pence. We're looking for that by the end of this month, especially while we can remain above the recent resistance zone around 7.75 pence on an end of day close basis. 50 and 200 day lines rising in parallel, which, as I said earlier in this video, tends to be a leading indicator on the upside. It's the equivalent of a golden cross. Moving on to Haydale, where you can see that we've had all the targets hit, the first, second, third, fourth we're at the moment, 0.4 pence, and looking for the next level up, which I suppose, as you can see from the chart, would be the main resistance that we had early last year, and that's through the 0.51 level. So looking for that, hopefully by the end of this month, while we're above the 0.4 pence level. Bitcoin Treasury Strategy people are doing rather well at the moment. As you can see, as far as Helium Ventures are concerned, we've blown the doors off on the target, which was just set, I think, over the weekend at 9 pence, above 9 pence. Looking for the main resistance on the way down from way back in 2021, which is not really relevant because obviously it was a different time. But there is a 12 pence level there to go for over the near term, and looking for that by the end of this month, while we're above 9 pence on an end of day close basis. Switching again to a different sector, Metro Bank, and here a beautiful gap to the upside. I think we've been on the case here since the shares were at around the 50 pence level, so it's been a win, and looking for further wins within a rising trend channel there from October. Top of the channel there up to £1.73. Looking for that by perhaps as soon as the end of next month, while we're above the May resistance at 123 pence. So let's see if Metro can deliver another decent push, but heading through to that level, 170 plus, would certainly be quite an achievement. On to Metals One, which was something of a hero back in April, May. The current situation obviously slightly less rock and roll, but we are now building a base above the 200-day moving average at 10.5 pence, and looking for a move perhaps to the mid to upper 20s, maybe up towards 17, 18 pence, even if the shares fade after that. Obviously we dropped out of that rising trend channel at 26 pence rather painfully just a week or so ago. Ideally we stay above that 200-day line. Moving on to a rather more obscure contender, which is Pipehawk, and here broadening triangle base, the top of the triangle there heading for 2.25 pence, but looking for that perhaps as soon as the end of this month, while we're above the 50-day line, now rising at 1.48 pence. The other point to note is that we've had a gap close buy signal, so closing that gap there up to 1.45 on Friday, and pushing ahead after that. Moving along to Physiomics, and you can see that the £111,000 value of deals this morning has done the shares some good. Top of the channel there, and the 200-day line, now the target at 0.62, and we're looking for that while we're above the latest gap there, 0.46 pence. Seeing Machines is next, and here you can see that we've got the shares bouncing off a rising 50-day line. Obviously, if you're cautious, you want to see a break of 2.6 pence, which is May resistance, but the ultimate target here, maybe as soon as the end of next month, could be up to 3.5 pence if that 50-day line starts rising, and if we can get an RSI above neutral 50. Star of the show, and I said stock of the year, largely on the basis of the share price gains, which you can see are 5x. On Smarter Website. I don't think many stocks are going to beat that over the rest of the year. Current situation is that we've easily exceeded our £2.20 target, which was like the fifth or sixth one, actually, I think, at the moment. Above 2.20, looking for an exponential target as high as £3.40, maybe by the end of next month. But obviously that's only while we remain above the £2.20 level. That line there, the line there from the middle of last month, going through the resistance that we had there at the end of last month. Below 220, back to 180, but hopefully 220 will hold, or at least the 180 to 220 range will hold on what has been one of the best calls and one of the best stocks of the year. Interviewed the following company last week, and one or two people seemed to like it. Was looking for up to 0.29 pence by the end of next month. Might get there a bit more quickly, or 0.26 pence rather, by the end of this month. And the current situation is that we're looking for that while we're on the right side of 0.2 pence. Probably one could raise that channel a little bit towards 0.28. That may be a reasonable target for the end of this month, especially given the way that both the 50 and 200-day lines are both starting to rise at the moment. So let's go for 0.28 by the end of this month. And after that, we can perhaps take a view on where the shares are going. On to the last stock, which is YellowCake. And here we've got the shares gapping up for the second time in consecutive months above the 200-day moving average at 500 pence. Above that, we're looking for as much as £5.84 by the end of July. Looks like that is an improving situation. That's it for me today. More updates tomorrow.